Thank you for joining today's webinar. We're really excited about this year. We see great opportunity out there. So today we're going to discuss, and really this month, we're taking time to continue to educate people why we're buying condos in Calgary. We both bought in the most recent development. We promoted the East Hills development, which I'll talk about the successes later. But today, we really took a deeper dive into what's going on in Calgary, and what's going to be happening in the future in Calgary. So to introduce ourselves, for those that don't know us, I know some of you definitely do, as I recognize some familiar names on the participant list. I'm Alex Wilson, broker owner, Remax Wealth Builders Real Estate, and co-founder of Remax Wealth Builders Real Estate, Kyle DeVici. We're both avid real estate investors. And as I mentioned, today's topic is why we're buying condos in Calgary. So I'm going to jump right in and bring the presentation. Been selling real estate in Toronto for over 11 years, and I guess really promoting Calgary now for 2 years. Number one individual agent for Remax for Transactions Ontario in 2019. We did more transactions in 2020, so expecting that stat to stay. Number 25 individual agent for Remax in Canada, number 80 in the world in 2019. Been inducted in the Remax Hall of Fame, awarded the Remax Lifetime Achievement Award at 35, currently 39. But my current portfolio is what gets me excited and what I like to share to people. So my first condo that I bought and the Kyle bought in the same building was a deposit of $39,300, and that's been transformed now into a $14 million portfolio. And I always start my presentations off with this because I feel that I need to show you my success in order to justify what I will tell you next. I don't want to just be a talking head on the screen. I want to come from a position of experience and success. So what we come along to now is talking about the why we're doing any of this. So we're going to talk about investing in Calgary, but the why you're investing in Calgary. So I show you my portfolio, show you everything I've built up since 2012. In 30 years, you always have to look into the future to understand why you're investing into real estate. But if I look over 30 years, my portfolio would be worth $36 million. And why I look 30 years, all my mortgages will be paid off in 30 years. This is a very, very simple mathematical equation. 30 years, all mortgages paid off. That's what the portfolio would be worth at a very conservative 3% compounded annual growth. We've seen greater growth rates than that, just giving you a 3% compounded annual growth. And what real estate does not provide, it does not provide instant gratification. You will not make money in real estate if you're seeking instant gratification. But what I'm showing you here is if you invest in real estate, it can provide has the ability to generate substantial wealth over a long period. Very, very important to keep in mind. That's why we start with this slide. Okay, so I want to tell everyone my background's in economics and finance. There's a relevance to this, and accounting actually too. The relevance of this is that we want to be transparent with our numbers. So it's great that I said my portfolio is worth $36 million in 30 years, but here's the reality of the situation. There's inflation, which will impact that valuation. So we want to show you what the concrete number is. My goal is to show you how you can take small actions, which will help you generate wealth in the future, and how that wealth translates into today's dollars. So really what we're showing now is a translation to allow you to visualize, well, what's that wealth actually mean to me today in the future? So what we do is we do a simple inflation calculation, which is we do this right on the Statistics Canada website. So that $36 million is actually going to be, in today's purchasing power, almost $21 million. So by buying a piece of real estate, holding it for 30 years, that's how you get this calculation. Now, we recently went into the build your own pension fund example. And what I wanted to show everyone with that is the final part. This is the key. The final part is understand how much cash you can generate from the portfolio for yourself and your family, which essentially ends up being your own pension fund. A pension fund is something that if you work for a company and they offer you a pension fund, you know that there's going to be money paid out to you at some point in the future when you retire. So what we're doing with real estate is we're building a pension fund. So it's great. Again, I buy all this real estate, it's worth lots of money, but what does that actually mean for me to live off this real estate? So what I did, took that valuation, applied a 5% return on investment on that value of that portfolio per year. Again, we're always looking to hedge against inflation. So I provided a 2% inflation protection hedge on that. So that means in today's dollars, I would have a yearly payout of over $600,000 per year, nearly $625,000 per year. That will be my buying power in the future and translated in today's dollars. I won't even need that much, but that's the power of this. And what I continue to show people is that may seem like, Alex, you have so many properties. How can I do that on my own? That's crazy. I actually broke it down to tiers in this slide. So you don't need to have a $14 million portfolio. You start small. You take these small steps. As I said in that last slide, what was my comment? Well, 2 slides ago, I actually wrote things down, so I'm organized today. My goal is to show you how small actions you make today will generate you wealth in the future. So these are the small actions. Let's take it bite size. Let's build the $1 million, the $2 million, the $3 million, the $4 million portfolio. You can all do that on here. 100%. I've done it. Kyle's done it. There is nothing that makes us special. Zero. These are just numbers on a piece of paper following statistical growth rates. That's all it is. Kyle, you want to add anything to that? That we're not special?
No, exactly. And this is exactly what each and every one of our investors does to make their money and build their portfolios as well. There's no magic here. It just takes time. You have to invest and then, let it rest.
Yeah, just that's all it is. So that's why I wanted to start this off today, is understand why you're here, why we're doing that. So now we're going to go into the why. So again, we started down this journey in 2019, looking at the opportunities in Calgary. So before I started marketing and investing myself, I was like, well, Alex, why are you investing in Calgary? So things I didn't know, which I'll educate you on when I started going in 2019. #1 most livable city in North America for the last 2 consecutive years. North America, we're not talking Canada, North America, most livable city. And 4th most livable city in the world. Didn't know that either. Calgary. Not Toronto, not Vancouver, but Calgary. And a lot of that has to come is the low cost of living. So it has the lowest cost of living for all the Canadian cities and 9th lowest in North America. That's massive. It's very affordable to live in Alberta and in Calgary. It's located, so from a lifestyle perspective, it's located in the foothills of the Canadian Rockies, which are world renowned. And you have tons of parks and green spaces. So it's a great city to live in. Why that's relevant is 2020 was not 2020 was a statistical anomaly in the world. Statistical anomalies the whole stats will allow the whole thing to level out at the end of the day, but it'll be a statistical anomaly. But everyone started asking, why am I living in a certain place? And what lifestyle do I want to live? Well, Calgary, again, #1 most livable city in North America and 4th in the world. Let's add some other things to that. Sunniest city in Canada, most extensive outdoor pathway for biking in North America, and the 2nd for healthiest lifestyle and life satisfaction of all the major cities in Canada. So if I'm sitting there and I don't need to be living where I'm living, and I can move to essentially the best place in North America to live for a city, why wouldn't I choose Calgary as a place that I can live in? It's incredibly affordable. It offers a great lifestyle to live. This seems like a great idea if I have the ability to move and relocate. So looks like a good place to live. Again, outside of the city, 5 world-class ski resorts within 2 hours. Banff National Park has, again, world-renowned Banff Springs Hotel. It's only 1.5-hour drive away from Calgary. And it's a real 1.5-hour drive away. It's not like I'm going to Muskoka and it's going to take me 4 hours unless I leave it at 3 in the morning. It is a true 1.5-hour drive away. So we continue on. Why is Alex buying condos in Calgary? So it's great lifestyle, great cost of living, but let's go deeper down in this. So if we look at the present, which is important, and the past, we know that Calgary is growing. It has net population growth of 10,000 people per year, but also they have money. Calgary is the highest per capita millionaires of all the major Canadian cities, and they have the highest wages per employee in the country. So the rich people live there, and other people make the most money in Canada. So it has the economics, the income levels to support higher real estate prices. We know Calgary does not have the highest real estate prices in Canada. That is teeters between Vancouver and Toronto. Calgary is way below them for real estate prices, and we'll get a little bit more into that later. But this is where we look at all the fundamentals, the economic fundamentals, going, okay, this all makes sense. So that was the past. Now let's look at the future. Alberta's population is set to increase 48% and will be larger than BC by not 2043. Versus Ontario's population is set to increase by 24% between 2020 and 2043. That's nearly double the growth rate of Ontario. So the growth rate of Alberta will be double the growth rate of Ontario, and Alberta will have a larger population than British Columbia by 2043. I didn't know this. Cal, did you know this?
I didn't. That's pretty amazing.
Yeah, I was blown away. And again, this is all Statistic Canada sites. This is not, I made up a spreadsheet. This is a screenshot that I put up here, Statistic Canada relevant website. So now we know that, okay, Alberta, they're making the money. In the past and present, we know Calgary has net population growth. Population is growing. And we know that it will double the growth rate of Ontario. And the population growth will be higher in Alberta than it is in BC. So Ontario and BC, which both have the most expensive cities in Canada, Alberta will outpace their growth from a population perspective. What's important to understand is we are in the business of selling roofs over heads. So if you're selling roofs over heads, where do you want to be? You want to be where the most people are going. So you also want where the money is. So looking at GDP input. So when I promoted Toronto in the past, and again, Toronto will always be a good buy, not worried about Toronto at all, the GTA, that's your blue chip. But when I've looked at Toronto in the past, I've said to everyone, well, the GTA is responsible for roughly 20% of the economic output for all of Canada. That's a big deal. So you know the money and the jobs are going to be here. Well, but then I looked at Calgary. I'm like, well, what about Calgary's economic footprint? What does it contribute to Canada? From a city perspective, it's number 4 behind Montreal, Vancouver, Calgary. Toronto, Montreal, Vancouver, all very expensive relative to Calgary. But guess what? Calgary's economic output is higher than provinces. It has higher economic output than Saskatchewan. It has higher economic output than Manitoba, entire provinces. So that small little area of Calgary compared to these larger provinces, its economic output is greater than those provinces. That's, again, a big, big deal.
I think a lot of people forget that Calgary is a big city. There's over 1.5 million people there. It's not the largest Canadian city. It's not a small suburb. It's not a bedroom community. It's a proper large city.
Oh, yeah, it's a tier 1 city. So again, I made this comment in other webinars. I can go to other Southern Ontario cities, tier 2, tier 3 cities, and they're more expensive than Calgary, and that makes absolutely no sense to me. That's where we see opportunity. So we are always looking at, well, where's the opportunity for investment? That's where we see opportunity. We're telling you about these economic fundamentals to understand where is it going in the future and why I should be investing in it today. So follow the money. The Minto is the builder that we buy in their developments in Calgary. The reason we buy in their developments is they're a very, very large company. They're Ontario-based, extremely well-funded, diversified. The Greenberg family, which founded Minto, is worth $1.57 billion. Minto is also publicly traded on the Toronto Stock Exchange and has $2.9 billion in assets. What that means to me is A, they're around for the long run. B, since they've been around for 60 years, they care about the name. And C, since they're publicly traded, they're also scrutinized by what comes with being a publicly traded company. So they have to justify the investments they make. And also they have a team of analysts behind them on payroll, guiding them as where's my next opportunity to make investments in real estate. So if a billion-dollar family and a multi-billion-dollar company is taking advantage of investing in another city, well, you know what? I'm going to follow them because they've done their research. They've scrutinized this more than I even have the ability to, because they have all these different people on payroll. They have to answer to shareholders and all those lines. When they do it, that means there's something there. And Minto has been doing it. And they have 8 rental buildings there, and they also have another 3,500 units they're looking to construct in the Calgary area, condominium units. So we've talked about the economic fundamentals of Calgary in regards to net population growth, the GDP that it produces. But let's talk about buying low and selling high. So why is Calgary so low? Well, in the past, Calgary has been viewed as an oil and gas producer. So I shouldn't say with the collapse, but when Calgary was running hot, oil was hitting the $100 a barrel price point. And then prices came down. We're over $50. We were over $50 yesterday. I don't know where we are exactly today at this moment, but we're over $50 a barrel yesterday. So what you want to do is you want to focus on the buy low opportunity. So the buy low is Calgary's already bottomed out on price point. Price point has bottomed out in regards to the real estate assets there. It only has the ability to go up from this point. The shedding of jobs has already happened in Calgary. The massive layoffs has already happened in Calgary. Now they're in their trajectory for growth, which I'm going to show you in a little bit. But we're looking at our buy low opportunity. When Cal and I bought in Toronto, our first condos we bought in December 2012. We bought on Gladstone and Queen. We got condos for the mid 200s. I will never be able to get you a condo in the mid 200s in Toronto ever again. Not exist. It's already gone. The train has already left the station. So in a buy low opportunity, it's, well, where are my opportunities to realize a good growth investment? Calgary ends up being the opportunity for the growth investment. So when we look at the buy low opportunity, new condo sale prices have dropped 21% since 2017. That's our buy low opportunity because we have now started to see increased resale activity in the Calgary market. And why I point out specifically this Warren Buffett example is that he made an investment in a pipeline just last year, which is massive. That's massive. Understand that oil and gas will be the backbone to grow off of for the Calgary economy into the future, which I'll reference back that later on in the presentation. You got to look at Warren Buffett's whole business is built off insurance. Why did he initially invest in insurance? He initially invested in insurance because they provide great cash flow for him. You need to look at oil and gas as the cash flow and the backbone that will now allow the Calgary economy to grow into the future, which I'll show you that it is. So we also have the Trans Mountain Pipeline. So this will allow the oil and gas to be better distributed out of Calgary. So one of the major issues in Calgary is that it trades at a discount to Western Intermediate crude, because Western Intermediate crude, which is the American oil, it gets refined off of Texas. Texas is right there. You go into the Gulf of Mexico, you can sell it all over the world. Alberta, there's no oceans. So how can I sell the oil unless I transport it? How do I transport it? Well, I need pipelines to transport the oil. With the completion of the Trans Mountain Pipeline, this will help the distribution of Alberta oil and actually get the price of Alberta oil up closer to Western Texas Intermediate crude, which will then improve the overall prospects for the oil and gas backbone of the Calgary economy. So this is where I start getting excited now. Really excited about this. So as I said, oil and gas backbone industry. And even with that backbone and the infrastructure that's already built for oil and gas, there are other subset industries which are now being established in the Calgary area to take advantage of the petrochemical process. I didn't even include that in this presentation because I'm focusing on the tech side, but you got to understand there's a whole petrochemical industry, which is an offset of the off the oil and gas, which is growing in Calgary as well. Calgary is energy financing experts. So even with the green economy, which may seem contradictory to oil and gas, it's the finance which generates the capitalist investment in Calgary. So if I'm not making money in oil and gas, well, I'll go make money in energy somewhere else. We all need energy. If we look at our fundamentals for investing, we go to Pavlov: food, shelter, warmth. Well, warmth requires energy. So that they'll just move, and they're going to move their investing expertise to the green industries, which they're already doing right now. We know oil and gas will always be there. That becomes a backbone for these other industries to grow and to Calgary to thrive. Calgary is built on $100 oil, and now we're going to see the benefits that infrastructure benefit other industries, which I'm going to show here. So Calgary ranked in the top 10 most attractive cities globally for workers. So great place to work. We've already touched on that. Calgary, from an expertise level, has the highest proportion of STEM graduates of all Canadian cities. That's degrees in science, technology, engineering, and mathematics. It also has low-cost office space. And I've talked about this in webinars, but again, I've went deeper for you guys. So let's talk about that. So we've talked about the tech boom is here. It's already happening in Calgary. So Calgary is home to 435 technology companies. 3/4 of these are startups. There's significance to that. There are more than 2,000 open tech jobs in the city, and a record 44,000 Calgarians are working in tech right now in Calgary. Why? It's because there is an affordability aspect. So you have the talent, you have the investment, but there's an affordability to Calgary that extends beyond just the living in Calgary where it's low real estate prices. So as tech has grown in Calgary, so have the numbers of tech companies that are moving now into the downtown core. And that's because of the affordability. Why? Well, Calgary downtown went through an extensive building period around 2014, expecting that oil was going to be $100 a barrel, which we know it's not. It's at $50 right now. What does that mean? Well, there is huge vacancies, which I pointed out on the other slide, 27%. So now let's look at what office space costs in Calgary. Well, it's $17.50 a foot. Edmonton, it's $21.16, 23.4% more. Toronto is $35.38, 102% more. Vancouver, $44.62, 155% more. 3/4 of the tech companies in Calgary are startups. If I'm a startup, that means every bit of capital is important. I'm always looking at where is there money I can save that I can reinvest in other aspects which are going to generate profitability for the company? Calgary is affordable. And I've said Calgary is affordable, but I'm showing you Calgary is affordable now. Now let's talk about the companies that are operating in the space. So with these startups, 3/4, again, the 435 are startups. Well, what you get then is you get your success stories. So let's talk about the success stories. So what's a unicorn for those that don't know? A unicorn means that a company has achieved $1 billion valuation. And Calgary has those. So Benivity is one. This just happened December 2020. Benivity achieved a unicorn status, $1 billion valuation, headquartered, tech startup headquartered in Calgary. So what happens when you reach unicorn status? You get the $1 billion valuation, but there are other spin-off effects to this. So what it does, it puts Calgary on the map. More investors take notice of companies in that area. They're like, oh, wow, Benivity, $1 billion valuation, that's great. Think of it like a sports analogy. So if I think of baseball, I'm a baseball fan. Baseball players come out of America predominantly, but there are baseball players that come out of the Dominican Republic. There are baseball players that come out of Cuba. There are baseball players that come out of Korea. There are baseball players that come out of Japan. There are baseball players that come out of Canada. And Canada is fairly recent for producing these major Canadian baseball players. But scouts, if they start seeing great players coming from one area, there's going to be more scouts going to that area because they want to see, hey, if what they're doing is they're producing great assets for us to invest in, we should get more assets from that area. So when you think of a sports analogy, it makes sense. So now you have these companies hitting billion dollar valuations in Calgary. So more people take notice. More venture fund capitalists will look at that area as where are the next opportunities? Where's my next unicorn for me to invest in? That means more money going in this city, more money being invested in the city. The essence of economics is money going in good, money going out bad. This means more money going in, good. More foreign money going in, good. What also happens, the founders of these companies that get these $1 billion valuations get massive payouts as well, the people that started the companies. They got to put their money somewhere. What area do they know better than their own backyard in regards to, well, I know some other great startup companies that I'm going to provide some venture capital to, and I'm going to start investing in those. So with this initial incubation period, you start getting the $1 billion valuation of these companies rolling, you start getting more and more and more and more investment. That's what we're seeing now in Calgary. So continuing on, I'm just including notes from these slides. You can read them, the articles like showing why people are doing that. The investment punching above their weight when it comes to attracting investment capital and high value deals to its tech sector. The other, I didn't mention it, but the other one, another $1 billion valuation happened in 2019 was when Solium Capital did sold to Morgan Stanley. Morgan Stanley did a major investment in Calgary, $1 billion valuation. So these are key. Again, these are foreign companies that are investing capital into the Calgary market. So let's talk more about the tech growth. So we're talking about these companies that are now moving into the downtown core. Let's give concrete examples of tech companies, these startup companies, taking up leasing space. SciMed had fewer than 20 employees in spring 2019, now has more than 200 employees and moving into 79,000 square feet and looking to hire an additional 200 to 300 people in 2021. Halcyon officially grew out of its cramped office space in the Blackfoot Industrial Park last year. That's a suburban area in Calgary. They've gone from 3 staff to 68 employees. Now plans to have 150 employees by the end of 2021. They've taken 20,000 square feet of office space. LodgeLink, they will acquire 300 new technology-based jobs over the next 5 years, plus an additional 300 non-tech jobs, which will all require another 50,000 square feet of office space in Calgary. And then from an international perspective, We have ESQ, which looked at Toronto, Vancouver, Winnipeg for cities to open up office spaces. They chose to open up into Calgary due to the affordability, due to the efforts that the Calgary Economic Development programs are offering. They're aggressively working with these companies to establish themselves in the city of Calgary. The momentum is there. International companies are investing. International companies are looking at opening offices, and the homegrown opportunities are coming to fruition regards after the incubation periods to take up that office space that has been vacated by the oil and gas that was originally built at $100 per barrel of oil. The tech companies are coming in. They're taking in those jobs. LodgeLink. Okay. So I wrote a question for myself here. Alex, you may ask, how do you know more international companies are going to come? Because I've already seen it happen in another market. Economics, as I mentioned, is all about statistics and recognizing patterns. So that's what my background's in. So let's look at a pattern. I don't know if you guys know this, but there's actually been an exodus of companies from Silicon Valley to Texas. And there's 3 reasons why. So, number 1, they're fleeing high taxes. While Alberta has the lowest corporate tax rate in Canada. There's also no land transfer tax or development charges in Canada. And I forgot this other point. I made a note to myself that I was supposed to put it, but I forgot it. There is no provincial sales tax in Alberta. So lowest tax environment in Canada, Alberta. One of the lowest tax environments in the United States, Texas. Number 2, expensive housing. People are leaving Silicon Valley, companies are leaving Silicon Valley because housing is so ridiculously expensive. Their employees, it costs them so much to have their employees in Silicon Valley, in San Francisco, in California. Kyle, I will jump onto you. Give your wife example we always give. Why is your wife employed in Canada and not in the US?
Yeah, it's exactly that factor. The fact she's a very educated, capable person, able to do a job, whether it's in Silicon Valley or in Canada. The fact is, paying her as a Canadian employee, she costs probably about half as much as it would in the US, given the salary requirements in San Francisco and the US exchange.
There it is right there. Okay, so expensive Calgary, well, so expensive housing is less expensive in Texas than it is in California. So then let's again look at our models. Calgary housing, lowest cost of living out of all major Canadian cities and 9th in North America. Okay, so there we go. And limited red tape in Alberta. So then government regulations. This one also gets me excited as well. So you have a $175 million commitment to the Alberta Enterprise Corp for an innovation. You also have a $10 billion stimulus package by the Alberta government that's already been signed into action. Part of that is with corporate tax cuts to help these companies grow and prosper and thrive. And another, I got a really exciting slide coming up. I got to see where it is. It's not there yet, but it's coming. But it'll go back into the why Alberta can easily sign off a $10 billion stimulus package, and that's coming very soon. But just to give, again, concrete examples of companies that are leaving Silicon Valley for Texas. Hewlett-Packard, 60,000 employees worldwide. Not all 60,000 are moving to Texas, but I just want to give an examples of the size of these companies. They're moving out of California, they're moving to Texas. Oracle, 135,000 employees worldwide. They're moving operations out of California into Texas. Elon Musk, I don't know if you guys have heard of him. Tesla, he has recently made a move from California to Texas. Dropbox, similar thing, 2,800 employees moving from California to Texas. We're seeing that happen. So we're looking at a high cost, high regulated environment in California, Ontario, British Columbia, moving to a much lower cost environment from to do business and for their employees in Texas, Alberta. That's where we're noticing things. Okay.
There's actually companies set up in Calgary specifically with their goal to relocate people, US workers, to Calgary, working for the exact same company, but just changing physical locations.
And this is a crazy slide. Love this slide. One of my favorite in the presentation. Okay. Why can Alberta do things that no one else can do in Canada? Well, guess what? We talked about backbone. We talked about oil and gas backbone. Well, what has the oil and gas backbone allowed Alberta to do? Well, it's allowed them to not take on debt. So if we look at, Kyle probably loves this slide too, if we look at the lowest net financial debt in Canada, well, Ontario was one of the highest at nearly 19,000 per individual. Well, guess what? Who has the lowest? Alberta. Alberta has the lowest per capita net financial debt in Canada, which means that in a time of crisis or a time when I'm looking to shift away from my backbone, still oil and gas to be there, but what else can we invest in? Alberta has the ability to write the check. Alberta has the ability to do a $10 billion stimulus package right off the bat, drop corporate tax rates down. Let's bring investment in. Alberta is the one that's going to be poised out of all the provinces to attract these companies, to attract the tech workers, to attract the incubation periods for these companies to arrive and thrive. And I just wanted to show this slide, this is one of our older slides, just showing the diversification of the employment in the Calgary area. We look at the diversification of employment, and we always again talk about oil and gas. Well, that just accounts for about 6.5% the actual economic workforce in Calgary, where we're diversified across so many other different areas in Calgary. So boom and bust. So Calgary historically has been a boom and bust city. So as I said earlier, we're just finishing the bust. And I'm not worried about prices in Calgary going down. That's not happening. That's already been happening. That's done. But we are coming out of the bust cycle now. December sales, 40% over 2019 levels and the highest volume in 13 years. Calgary is poised now to start getting into the boom periods. That is coming. We've talked about the tech companies coming in. From a distribution standpoint of the oil and gas, the Trans Mountain Pipeline is scheduled to complete in 2023, which will help the overall backbone of the Alberta economy, of the Calgary economy. Great things are about to happen in the Calgary market. And we've talked about Alberta as a whole. And when we're making these investments, these are the investments that we get to make. We're able to buy units with only 5% down. So from a capital allocation standpoint, if I'm buying something in Toronto, I'm going to need at least $100,000 from you. When we're doing these investments in Calgary and these pre-construction opportunities, we only require 5% down. So we're doing investments where the capital allocation is only between $10,000 to $20,000. That's it, until the building's completed at a future date, which is in 2023, 2024. And that's when all this incubation periods, all of these economic positivities will start paying back, and you're right in the thick of it. You have the ability to assign your units, so we never recommend that. We also get 2-year rental guarantees with these properties, which come with full property management, and all these units are cash flow positive with these rental guarantees. So what we're investing in is investing in positive cash flow opportunities, which come with full property management as well. So you can be in whatever city you're in, it's full property management. You don't need to worry about the property that's included in the rental guarantee, which is cash flow positive. From a taxation level, there's no development charges or other closing costs. There's no land transfer tax. This can be roughly equivalent in Toronto, $40,000 or more in savings. So you don't need to worry about those extra costs. On closing, you're only going to pay your legal fees to close, which is going to be under $2,000, and maybe it's about $2,000. That's about it. That's all you have to worry about. I also didn't include in here, but there's no rent control. There is no rent control in Alberta. So you don't have this typical red tape that you have in Ontario and in BC. You don't have that here in Alberta. So when we started going through all these layers in 2019, we're like, this is poised for great growth and zero headaches. There's no headaches involved in these opportunities. So that's why we've been buying condos in Calgary. Okay, so going to my policy pro investment slide. As I said, no rent control, no foreign buyer tax in Alberta. So internationals can still invest there. $10 billion stimulus package, including reducing corporate taxes, no land transfer tax, no provincial sales tax, no development charges. Why aren't we living there? So let's talk about the recent successes as well. From properties that we've sold. Era, I personally bought in there, sold 180 units in 3 months, starting in November 2019. Building sold out. Annex, which we promoted during the summer, sold out the investor release, which was 40 units in 2 months over summer 2020. The rest of the building is reserved for end users. And then East Hills, which was our most recent development, which both Kyle and I invested in, we sold out all 87 units in 2 weeks in November 2020. What we're doing with these webinars now is we want to educate everyone so that when the next opportunities come up, which will be the next two opportunities, will be Era 2 and East Hills 2. East Hills is a master plan community of over 600 units. The next building will be launched sometime in Q1, and so will the next building of Era launch Q1. We want to educate you so you can ask your questions now. So when these opportunities come, they go like this. Like, I say 2 weeks for East Hills. It was 3 days for 90% of the units, and then 10% of the units was the remaining 11 days, essentially is what it was. So yeah, we want to educate you so when these opportunities come, you're ready to jump on these opportunities. So I think we did a good job today. Kyle, did we do a good job today?
I think so. Okay,
so what we will open up the floor to questions now. So you can just ask your questions in the question and answer box. I see 2 questions there right now, so open that up. Thousands of jobs have been reduced in the oil and gas industry during the downturn. Yes, 100%. that we do know that oil and gas has lost jobs in Calgary. Now, here's the thing though. I also know that there are 700 jobs that are relocating back to Calgary from Suncor from Oakville. So Suncor is reallocating their Oakville jobs. They're relocating everyone out of Oakville and then moving them back into Calgary. As well, thousands of jobs in the industry have been reduced. A lot of those job cuts have already happened. What we're seeing is we see the opportunity for other industries to fill those jobs in as well with the coming of the Trans Mountain Pipeline, that will continue to stabilize the backbone of the Calgary economy. Okay. Any other questions from anyone here on this? And the key thing is, remember everyone, when we're doing these pre-construction opportunities, we're not looking for something that's done today. We're looking at things that are done in 3 to 4 years. And then with the rental guarantees that provide cash flow opportunities, that provides another 2 to 3 year buffer period. So we're not looking at what's happening today. We're actually looking at what's happening in 5 years. That's what the key of this opportunity is. So you invest 5% capital, and then you're able just to sit there and wait and not worry about it for 5 years. That's ultimately is what you're looking at with these opportunities. So you don't need to get bogged down with certain negativities that are out there in the market because you're not worried about it right now. We always buy for the long term. We're always looking at what are long-term opportunities, and the sky looks very, very bright moving forward. And that's what's key. So I'll give everyone about a minute more to see if they're gonna ask any other questions. Otherwise, we'll wrap it up at the 1:53 mark. Kyle, anything else you want to add?
I just saw the one comment in the chat that Calgary has nice weather for 3 months, but Texas is warm. Well, that might be true, but Calgary is the sunniest city in Canada, which goes a long way. But many people don't want warm weather. They like the cold weather to go skiing or taking advantage of the outdoors. And Calgary has that, very livable, accessible to the mountains. You can ski a mountain there. You can't do that in Ontario or Texas that has 0 ski hills. So
I'll also add this, and Kyle and I are both from Sudbury originally. So we're very, I think it's actually relevant. Kyle and I are both from Sudbury, which is primarily a resource-based community. So we lived through a boom and bust economy and seeing what resources and diversification of economy can do. Sudbury was all nickel, lived and died by the nickel price, lived and died by what Inco and Falconbridge did. Inco and Falconbridge have different names now, but that's what they were back in our day. So if Inco and Falconbridge went on strike, then the economy was decimated in Sudbury. That does not exist anymore. They've completely diversified their economy, and that's what you're seeing in Calgary right now. And you've seen crazy price growth in the Sudbury market recently in real estate prices as well. So I just want to add that fact in regards to how resource-based communities can change, but also continue to use that as a backbone. Like mining's still there.
That's a great point, Alex. Like
employment background.
It was known for mining. Now that's a small part overall of the economy. But what has significantly grown is mining consultation. So Sudbury is now known as one of the best knowledge centers for mining. Methods to mine, machinery, all of that goes around and supports the mining industry. That's not necessarily taking place as much in the Sudbury economy anymore. Yeah, and that's what key that people need to realize with this. The opportunity, you're going to read negative things. We're at the bottom. We're going to get that's where the opportunity is. Jump up and down, be excited. There's case study after case study after case study that shows that there's opportunity in the down market, and Calgary is doing the right things to pivot. And also, but why I was actually talking about Sudbury is talking about weather. I can't stand hot weather. So give me the cold every day of the week. And their cold is a dry cold. So I will actually take -30 over a damp -2 day in Toronto every time. My coat can't protect against dampness. Kind of getting off tangent here. That's why I have papers before. But the weather, to have the Rocky Mountains at your doorstep. If you look at countries around the world, they think the Canadian landscape is the most amazing thing, and they love the Rockies. Who do you think works in Banff? The Australians. Australia is hot, and the Australians love Banff. So again, I'm going kind of off on a tangent. And with Vancouver too, or Whistler.
Yeah. The Whistler. Yeah,
Australians, New Zealand.
They love being in the mountains. So you have the Rocky Mountains, which offset the cold weather in the winter. And I'll answer this final question in the chat. There's one in the Q&A as well, so I'll go to the chat quickly. What buildings are coming up this year? Q1, we have East Hills Phase 2 and Era Phase 2, which are supposed to be coming out Q1 this year. Everyone that's signed up here will be alerted of the new launches. There will be a recap email of everything we talked about coming out on this, as well as some next step options as well, so you don't miss out. So what you want to gear up for is East Hills. From price point, that'll be low 200s. And then Era, which is a more downtown location, you're probably looking starting point at the high 200s, I would say, for Era in that location. So low 200 opportunities in East Hills, probably high 200 starting opportunities in Era, which is more of a downtown location. Again, both buildings I've invested in Calgary's, Kyle's invested in the East Hills. Oh, in regards to why do I promote investment in Calgary? I think it's a great opportunity for everyone that buys. That's ultimately what it is in regards to that's the opportunity. So I'll wrap this up here. Just getting into more specifics in regards to asking in the chat. Lottie, send me an email directly and get into specifics. I can send you the floor plans of units and general price points. from the lead. Yeah, awesome. Okay, great. In the most recent developments, so you can get on that. Anyways, we're coming up on the hour here, so yeah, Randolph, pricing. I don't have price list yet. Doesn't exist. Now I'm getting people sending me emails. If you signed up for this, you will get an email with all that information. Randolph. Oh, does the builder price include? There is no PST in Alberta. It's only GST. So when you're looking at pricing, you want to tack on the 5%. Part of that though is rebatable back. I believe it's 35 or 33%.
Yeah, about a third of the GST.
Third that you rebate back from the federal government. But again, all my analysis that we provide, we show that the cash flow calculation with the GST included, so that people fully understand. We're full about transparency to show people how you get positive cash flows from these. So everyone, you'll get a recap email on this. Price lists are not out yet, but I have a general idea what pricing will be. And we'll talk to everyone soon. Okay. Talk to everyone later. Thanks for attending.
Bye, everyone.
Bye-bye.